Hi everyone, and welcome to this webinar brought to you by CoinDesk and the CME Group. Before we begin, a bit of housekeeping. You can submit questions for our panelists in the box at the bottom of your screen. I can't promise we'll get to them. We only have 60 minutes and a lot of ground to cover, but I will try and incorporate some of them into the conversation as we go along. Also, we will be uploading this webinar to our website shortly after, in case you want to listen to it again, and I'm sure you will, or if you know someone who's interested but unable to join us today. So let's get started. Today, we're going to talk about Bitcoin futures. And joining us to do that, we have Tim McCourt of the CME Group, Managing Director and Global Head of Equity Products and Alternative Investments. And we have Miha Gercher, the Head of Business Development at Bitstamp. Tim, I'd like to start with you. You know capital markets. You've spent most of your career in various aspects of trading and indices. And you joined the CME Group in 2013. Is that right? How did you get into the world of Bitcoin? Where did you first hear about it?
Yeah, great question, Noel. Thanks again for having me on today. Looking forward to our conversation. And as you point out, what was interesting, so I joined the CME back in April of 2013. Probably not that far away from the first time, I really started hearing or kind of digging into what Bitcoin is and what the underlying technology is. And I would say it's something that I was, kind of early days fascinated by, but not necessarily familiar with. But it was kind of on the periphery. And here at CME Group, where you kind of alluded to in my title, that I look after both the equity index products as well as alternative investment products. And kind of up until the launch of Bitcoin, that really was just the commodity index products that we offered here at CME Group. And as we learned more and more about Bitcoin and we started looking at the Bitcoin reference rate back in 2016, I would say that's where my interest really started to increase. And my education really started to increase, and I found the concept fascinating. And it didn't take that long to look at in terms of when we're first designing the Bitcoin reference rate, to look at the type of market that we could develop for derivatives, specifically for a futures contract. And when you look at the customer interest, whether it was people who had natural exposure to the underlying spot Bitcoin market, and needed a hedge vehicle, or those participants who just wanted to access Bitcoin through a regulated futures product, it was very clear, I think, to me early on, just personally, that this was going to be a fascinating product and I think a market that could be developed for balanced customer participation across multiple segments. So my interest in Bitcoin, I think, has only increased since there, and continued to learn new and fascinating things about Bitcoin and the kind of crypto and digital asset space every day.
Well, the CME Group certainly has been instrumental in bringing Bitcoin to the attention of even more people. You mentioned the Bitcoin reference rate. Can you fill us in a bit on that? Why the CME Group decided to create that and how it works?
Sure. So in terms of the Bitcoin futures contract that we have at CME Group, the underlying to that futures contract is the Bitcoin reference rate. And that is a reference rate that we designed with our partner Crypto Facilities, and it was launched back in November of 2016. So it's been around for over a year now, and it's something that we designed where we wanted to create a benchmark that tracked the aggregated value of US dollar per Bitcoin. And the way that index works right now, there are 4 constituent exchanges, of which Bitstamp is one, as well as Itbit, GDAX, and Kraken. And what we do is from 3 p.m. to 4 p.m. London time each day, we aggregate the actual transactions of Bitcoin dollar into a reference rate that's designed and arrived at by partitioning that 1-hour window into 12 equally weighted 5-minute samples, where we take the volume weighted median per sample and then average it to come up with the daily Bitcoin reference rate. The reason why we wanted to go the reference rate route was that we wanted to design something that the futures market could reference that we thought was robust, that was resistant to manipulation, and increase the confidence for the marketplace to both trade the future, but to also have an indication of where Bitcoin was trading for that day, which is a very important feature for a futures contract.
And can I ask one final thing about the index? Why the Bitcoin reference rate? Why is that used as a base for the futures rather than the Bitcoin real-time index?
Oh, this is a good question. So we also, at the same time, launched the Bitcoin real-time index. And the difference there is the Bitcoin real-time index is more a aggregated representation of the order book of bids and offers on constituent exchanges of where Bitcoin can be bought and sold. the Bitcoin reference rate, or the BRR, which is referred to as the aggregate trade flow of actual spot transactions. So the difference being the Bitcoin real-time index shows you indicatively where the prevailing bid and offer is. It kind of builds a consolidated order book and then transposes that to a real-time index. But the reference rate is based on transactions such that when the future expires against that reference rate at maturity, it in theory will maintain what we refer to as the theory of convergence between the futures market and the underlying spot market, because it's based on actual transactions that occur that participants can participate in the four underlying constituent exchanges as well in an attempt to replicate the reference rate.
Miha, you're a lawyer by training. How did you get involved with Bitcoin?
Well, that's actually a pretty funny story. And in those days, everyone who got into crypto got in by pretty much coincidence or some funny story or some introduction by some even earlier adopter than themselves. So I got to know Damian Merlak, one of the co-founders of Bitstamp, probably like 15 years ago. And we hung out at the time. And one day, I think it was like 2010, he just said to me, there's this new thing called Bitcoin, and it's works like this. And immediately it struck my attention because it was something new and something completely outside of the box. And I probably made in those early days the same mistake that everyone else did at the time. So I didn't really get involved until 1 or 2 years later. And then in 2013, when Bitstamp was already an exchange, not a really big exchange, so one of the smaller exchanges, I pretty much got a phone call one day saying, hey, would you consider working for Bitstamp? And I was actually, I think, employee number 3 or 4 or something. But when I joined Nate's and Damian back then, we didn't really have any notion or any idea that Bitcoin or cryptocurrencies or Bitstamp for that matter would become, years later, the constituent exchange of the CME index, and that will be sitting on the CoinDesk webinar with Tim and chatting about Bitcoin futures. So,
I mean, talk about taking a brave decision. I mean, talk about risk taking as well. And again, you end up working with the CME, which is one of the most venerable financial institutions out there.
Yeah, that's true. But then again, all relationships, I think, start pretty in a similar fashion. So initially it's an idea, then it comes an initiative, then people start connecting and talking about it. And when Tim mentioned crypto facilities, we pretty much had started discussions somewhere in 2016. And then over months, we ironed out how the relationships would work like. I won't really go into much detail here because that's, the exchange business is pretty boring, but when it comes to setting up new products, but the goal is that these products are exciting once they're launched. So that's kind of our take on it.
Yeah, I think
Have you been? Yeah, go ahead, Tim.
I think the one I would add, just kind of, anecdotally, right, where Miha was saying is that the exchange business can be pretty boring. I think, despite being the CME almost 5 years, my background before that, I was an equity index trader, an equity swap trader, and it was always very hard to kind of explain to my family what that meant or what I did for a living. So, after 13, 14 years in that space, they finally started to sort of get it. Didn't quite understand what moving to the exchange meant. Understood that I was now somewhat related to the same products, but operating a marketplace. But I tell you, this past kind of holiday season, all my relatives now knew and came up to me and said, hey, you work at CME Group. Tell me about this Bitcoin future. So now everyone has a very keen interest in what I think us at the exchanges do, mainly because of the hype and the interest around Bitcoin. So I think that's kind of a funny story how even, Miha, as you were saying, that what we kind of do on the exchange side, it's just fascinating to see what this has done to increase people's awareness of what the exchanges do and what we provide to the market.
Yeah, hype does serve its purpose. It drives us mad, but it does serve its purpose.
Yeah.
I come from the finance sector myself, and I used to try and explain to my friends and parents that the plumbing is actually where the action is.
I couldn't agree more.
Miha, have you been seeing much demand from had you been seeing, before you started talking to crypto facilities and the CME, had you been seeing demand from your clients for Bitcoin futures?
Well, I think primarily that's probably more a question for Tim. But I would say that the whole notion and the idea of having Bitcoin derivatives and also Bitcoin futures was probably never far from the surface in the crypto markets. But I do think that since crypto markets are very young, and that initially everyone involved, and that being for a long time so, is that we were primarily always serving retail investors on the spot exchange side. So I think as the markets matured, the real need for Bitcoin futures kind of evolved along with the markets. And right now, I think futures are proving themselves to be an integral part of a functioning and mature markets. And if crypto markets are ever want to become, where everything else is at the current, point in time, I would say that we should be seeing more and more derivatives products, and not just start and end with Bitcoin futures.
For our listeners who aren't very familiar with how futures work, can you give us a brief explanation of why futures would be good for the Bitcoin markets? Why do you think it adds maturity?
I think Tim pointed out the two main reasons earlier. One is being that whoever holds exposure on the spot market would probably like to have some instrument to actually hedge their exposure. And given the volatility of the Bitcoin market and crypto markets as a whole, futures serve this purpose well. And on the other hand, because Bitcoin spot markets and exchanges are not really subject to regulation as in the scope they're seeing with CME, this prevents a lot of institutional players and professionals to actually get involved and get exposure to Bitcoin and crypto. And what by having Bitcoin futures listed on CME does is to enable a whole new segment of investors and traders being able to get exposure, if not direct, at least indirect exposure to these markets through derivatives.
And so you believe it is encouraging further institutional investors to take positions, whereas perhaps before they might not have been comfortable with that much risk?
Without a doubt.
Yeah, and I think that's something that we've seen too, even just going back to kind of what I was saying earlier, when we launched the Bitcoin reference rate back in November of 2016, the upwelling of customer interest and kind of this crescendo of demand for a futures product really grew from that point where institutions were looking for access and they wanted to do so on a regulated and trusted exchange. So CME fit that need. Something, our desire to launch the future was in direct response to some of this institutional feedback that we were receiving.
Tim, what was it like on the first day? Do you remember?
I mean, it wasn't that long ago, but it feels a long time ago. And I mean, the first day was exciting. With any product launch, it's always good to kind of pivot from the design phase to the commercial phase where it's live and you see customers showing up to manage their risk. But I think what was interesting about Bitcoin is that there was so much interest and there was so much kind of unique attention being levied onto the launch itself that it was a very interesting and new challenge for myself and my team here at CME Group. And we were very pleased with the launch on day one. We're on that. We actually launched the trading day on Sunday night. So Sunday night, all of us we actually were in Chicago in what we refer to as our global command center, watching this market go live. And it was fantastic, to have everyone around there watching the success of going from the idea phase to the actual phase where this product became a reality. It was great. And we had, over 1,000 contracts trade on that first day, which is a success by any measure for any new futures product, with over 100 customers trading almost $100 million in notional on that first day. And it was truly exciting, and I think something that I will remember for a very, very long time, and one of my more interesting and exciting and I think proud accomplishments here at CME thus far.
That must have been fantastic. I mean, what it wouldn't have given to being a fly on that wall.
Yeah, it was fun. It was definitely a lot of fun, and it's good to have the product out there in the marketplace and continue to grow it from here, where it wasn't something that I think just was kind of a day one success. We've seen continued customer interest from all segments, from all regions, where we have both U.S. and non-U.S. customer participation, and the fact that we've kind of had volume in all 4 expirations, that open interest has continued to grow, that ADV, or the average daily volume has grown to about 1,500 so far for 2018, with, some days last week trading between 2,000 and 3,000 contracts and open interest almost at the 2,000 mark. These are all great milestones for a new product to hit only a few months into their life here at CME. So I think not only a great day one, but a great growth story from day one onwards.
So again, for those of our listeners who aren't familiar with how the futures market works, these are good volumes for any financial product?
Yeah, in terms of a new product to hit kind of the 1,000 daily volume mark, or exceed that 1,000 daily volume mark in terms of number of contracts, as well as over 1,000 lots of open interest. And we've had over 1,000 unique accounts trade the product since December. These are all great milestones that show the contract is off to a healthy start. I mean, we have a long way to go to continue to work with customers so they could use this product to meet their risk management needs and fold it into their investment thesis. But it is off to a very strong start and something that we're all very pleased with here at the CME.
And you're right, it wasn't that long ago, 3 months or so, but it certainly feels like it given what you've accomplished.
For sure, and I think we were kind of saying around sometimes, even with Miha earlier, it's 3 months just seems a lot longer. I think in the crypto space, just given the nature of the market and how it's open 24 hours a day, and CME futures are available nearly 24 hours a day. It's definitely an exciting time, I think, for the CME, for our customers, and for the cryptocurrency space in general.
Yes, for those of us who have been working in the cryptocurrency space for a very long time, we're still talking like 5 or 6 years, 7 for us. For those who've been working a really long time, it's not that long. It just feels like it. Heading back to exchanges, one thing I think it's worth talking a bit more about is the self-certification process. Tim, if you could explain what that is and how it works.
Sure. So the self-certification process is used across asset classes and has been for many years, where it allows futures exchanges, or DCMs, which is referred to as designated contract markets, to certify new products with the CFTC, where we as the exchange certify that it meets and it complies with the rules and regulations of the CFTC and the Commodities Exchange Act. So it's something that we use for all new products. It's the process by which we filed with the CFTC to begin the trading of the Bitcoin futures back in December. To put it in perspective, it's the same way we launched the Russell 2000 index futures back in July, and many of the other index products and other products that we have here at CME. So I think it's something that people were not necessarily familiar with, but it has been mentioned because of the attention that the Bitcoin futures has received. But it's a very standard practice for exchanges to use the self-certification process with our regulator to list and clear new futures in the U.S.
And it makes listing them more efficient. You don't have to go through the whole onerous approval process by submitting the specs, etc. Is that right?
Well, yeah, it's just a different path forward. We're overall offering the futures contract on a regulated marketplace brings a number of procedural steps that need to happen. So we look to the certification process, and it's public. All the information is available on our website as well as the CFTC website, where things stand in that process. So the main difference is the certification process is a 10-day window, where on the 11th day the contract becomes effective. So it's just usually it could be a more expedited way for that contract to be listed, but it is done so under the regulatory purview of the CFTC. And we had several conversations, not only with the future, but even back in 2016 with the launch of the Bitcoin reference rate with our regulator. This is something we work closely with our regulator on, as well as customers, to make sure that we had their feedback in the design phase. And just the procedural route for bringing this product to market was done via self-certification.
When you say you work closely with the regulator, your regulator is the CFTC, I presume. Now, how are they, what's it like, the relationship with them? Are they very hands-on, or do they just keep their respectful distance?
Well, I was starting to say that might be more of a question, I think, for some of my colleagues in legal and regulatory affairs. But, with any product, we work closely with them. And as one of the largest regulated exchanges globally, we obviously have a very close relationship with our regulator and customers. So I would classify it as a very close working relationship, and one that we're obviously both very supportive of to make sure we do what's best for the market and best for our customers.
And as we all know, the Bitcoin price has been, actually you could say, volatile over the past few months. Tim, what impact is the recent volatility having on the Bitcoin futures, on either the demand or the price or the workings of?
Well, it's a good question. And I think, Miha, maybe can chime in after, where I think it be somewhat similar impact on, supply and demand in both the futures market and the cash market. But as the price action has been dynamic and more volatile the last few weeks in Bitcoin, we've seen continued interest grow, or continued interest in the futures contract, as well as growing interest from customers that as the price moves, people have different risk management needs. So I think the one thing that's interesting, though, as the exchange operator, we're fairly agnostic to the directionality of price move. We just want to make sure that when the price moves and customer risk management needs surface or evolve, that they can transact in the manner they need to in a tried and tested and regulated environment that has efficient price discovery in a transparent manner, which is what we really strive to deliver to the market and to our participants here at CME. So I think while the price action always, I think, will increase attention to it, our primary focus is on maintaining the efficiency and the integrity of the market while the price moves in a volatile or a fairly stagnant manner.
Miha, what impact do you see on Bitcoin futures demand from the recent volatility?
Well, there's more than just one view to this. So although I can't really pinpoint what exactly drives the price around these days, I would say that if we look at a longer time period on the spot exchanges, you can see that volumes and price and everything else kind of picked up over the last couple of years. Just at Bitstamp, for example, we had our trading volumes went up 6,000% in 2017, meaning that, and along with that, new customers, then more transactions processed. And I think the whole 2017 was a very exciting time in general for crypto, and also a lot of new concepts coming into existence, a lot of technological breakthroughs. And I think if we add the Bitcoin futures in December, I think I'm not at all surprised that the markets just went off the chart, because it's, I think, a clear indication that cryptocurrencies and Bitcoin in particular are no longer this obscure technology that's only used for speculation, but I think are starting to find their place in the real world when it comes to, building businesses, financial markets, and the likes. And it's, I think, hard to say what impact futures have right now on the price, since, CME is trading, let's say, wheat for 100 years plus and Bitcoin for only 3 months. So I think time will tell more what kind of impact do derivatives on regulated exchanges have on the spot price. But I think this is work in progress, and that once we have a longer timeline and some more track record, I think the answer to that question would be easier to answer than right now.
Yes, and I'm sure even then going forward, there are so many factors that influence the price moves. But it is true that the launch of the futures did draw a lot of attention, both retail and institutional, to the sector, and obviously that can exacerbate volatility when volumes flood in.
Exactly.
Tim, going back to the on the volatility, how do the circuit breakers work?
Sure. So in terms of when we look at some of the risk management tools that CME has the ability to deploy for maintaining orderly and efficient markets, we use what's referred to as circuit breakers as well as daily price limits. And for Bitcoin, the circuit breaker is set at 3 levels, where at positive and minus 7, 13, and 20%. So as part of the overall risk management program, those first 2 price limits of plus or minus 7 and 13% are circuit breakers. And what that means is the futures contract traverses that price range within a session. A 2-minute monitoring period will begin, and the futures price won't be allowed to go above or below that positive or minus 7% daily price limit or circuit breaker. At the end of the 2-minute period, if the futures contract has bounced away from that level, so it's come off negative 7%, for example, the contract will remain trading, but the limit will expand to 13% on the down and upside. If the futures contract remained at that minus 7% limit, which is referred to as lock limit in the futures vernacular, then a 2-minute halt would happen in the contract, and the market would go to a pre-open state, which would allow market participants and liquidity providers the opportunity to adjust their risk, to kind of catch their breath, so to speak, before they stand up and put new prices in for liquidity provision, and just kind of take a general collective view during that 2-minute pause. The only difference is at the 20% level, where if the contract were to trade up or down 20%, that's referred to as a hard limit, where the market won't allow to be traded beyond that plus or minus 20%, but the market doesn't halt. It can trade at that limit of plus or minus 20%. And this is something that we put in place in terms of just helping to manage the risk of the marketplace. You know, as we admit, we're kind of chartering new territory here with the Bitcoin future, and it's something that we wanted to put in place, that our customers asked us to put in place, just to make sure that we had the ability to maintain a efficient market and an orderly market as people are beginning to trade the Bitcoin futures.
So it's a cooling off period, basically.
That's correct. That's another phrase that you often hear people refer to, either cooling off or a price limit or a circuit breaker. It's all the general idea where it just gives the opportunity for the market to catch its collective breath in the event of that type of percentage move within a session.
And so these circuit breakers plus the hard limit of 20% are perhaps yet another way that the futures can tame some of the volatility inherent in the Bitcoin market.
Well, I think it might be too early to tell if the futures are kind of taming the volatility. Even if you just look at these early days, the cash or the spot market does trade more, considerably more in notional value. But I think that's part of the general risk management practice that we look to deploy in terms of maintaining order. And it's something that I would add too. These are things that we're constantly reviewing, both with our risk management folks here at the CME as well as with customers, because this is an evolving and dynamic marketplace, and we have the responsibility to make sure that we evolve the market as needed as it continues to grow. So this is something that we're constantly reviewing internally and externally with customers, but we have found it useful to date in terms of both managing the risk of the marketplace and also increasing the confidence of market participants to take a step into trading the product to manage their risk or gain access to the Bitcoin market.
Jim, what are open interest levels like at the moment? And also for our listeners who aren't familiar with the term, could you explain what open interest levels are?
Sure. So open interest refers to the number of contracts, the number of futures contracts that are carried at each individual maturity. So right now we have 4 contracts in the market that have various maturity months, March, April, May, and June of 2018. And across all 4 of those contracts, we have just a little bit under 1,600 or 1,700 contracts of open interest. And that just is the aggregate volume that customers have traded that nets out. So that's the number of contracts that individual market participants are holding, and then we aggregate that into one view. So to put that in perspective, many futures contracts have most of the open interest in the front month or the first month. For Bitcoin, that's March 2018, and that open interest is just about 1,500 contracts in that front month for March.
And what does that imply?
That's just effectively the number of contracts. So if you look at the current price of Bitcoin, where we have at CME, our Bitcoin futures contract is 5 Bitcoin multiplier. So if we had 1,500 contracts in that March expiration, where the Bitcoin futures price right now is $9,300. That's about $70 million worth of notional exposure that resides in the March expiration, which is the last Friday of the month, which in this case for March is March 29th, actually, for this month, given the Good Friday holiday. We actually moved it up one day. So that's $70 million currently set to expire at the end of this month.
Miha, are the open interest levels something that you follow to get a take on market sentiment?
Yeah, well, of course we follow all kinds of indicators, and this one not being an exception. But I think at this point in time, it's still a very early days for the Bitcoin futures. And also at the current point in time, they're, I think, serving a very particular professional aspect of the market. And as Tim pointed out, cash exchanges these days trade much more volume than the derivative exchanges, which I think will change over time. But right now, I think it's an indication of just one particular segment of the market who are already exposed and are actively trading Bitcoin futures.
Why do you think it'll change over time, the volumes on the cash versus the derivatives?
Well, I think new products usually take some time to get wider adoption, and I think it would be unreasonable to expect that whoever is participating in derivative trading and futures trading right now that's the end number that we're going to see. So I think the potential here is really considerable, and I think only time will tell how much more potential this thing actually has and how much interest in these products we'll see in the future.
So it's a question of market familiarity. And do you think that the market mix could have an impact? What I'm thinking of, if more institutional investors come into the market, could that impact the demand for futures, the volumes on the futures exchange, rather?
Yeah, I think that's a great question. I think in general, institutional market participants and investors are something that are probably still very much underrepresented in the cryptocurrency space in general, and including Bitcoin. And saying that, you will have to keep in mind that, for example, cryptocurrency exchanges usually are or predominantly are trading and serving with retail customers, and institutional interest, I think, kind of coincides with the market caps of Bitcoin rising above a certain threshold, more advanced products becoming available, and so on. So I think this is something that's going to be interesting to watch in the upcoming months.
It certainly is, yes. Tim, you mentioned something a minute ago. The CME contract size is 5 Bitcoins, whereas on the CBOE, for instance, it's 1 Bitcoin. Can you explain the rationale behind that decision?
Sure, and I think there are kind of two things that distinguish the CME futures contract, and it's really size and settlement. So when we look at the size, we went with the 5 Bitcoin multiplier, which in terms of our futures contract, just to remind folks who are listening, our futures contract is US dollar based. It financially settles, so you just move US dollars. You're not actually moving any actual or spot Bitcoins at maturity, you're just exchanging the dollar value performance of the contract the same way you would with an S&P 500, NASDAQ, or Russell 2000 index futures here at CME. So when looking at that, like a lot of products here at CME, we try to innovate and solve customer demand issues and deliver new risk management tools with customer demand and feedback incorporated in our decision. So when we're engaging with customers kind of during that period I was talking to before, where there's this crescendo of interest and this upwelling of demand for risk management tools in the Bitcoin and cryptocurrency space, we worked with customers to design the contract with 5, where we just thought that was the appropriate size. And I think kind of given to some of your comments and what Miho was just talking about is we believe that is what, in conjunction with the Bitcoin reference rate, is what will attract the institutional flow to further evolve the financial ecosystem around Bitcoin and in using our Bitcoin futures to do so. So when we look at the Bitcoin reference rate, I said where the other distinguishing feature is the settlement, it's because that reference rate, or the BRR, can also be used for benchmarking purposes. It's available for licensing. It's something that plays very well into the financial ecosystem for other product innovations and other product developments. So we think it's very prudent that our futures contracts settle to the Bitcoin reference rate. And when we were looking at designing the Bitcoin reference rate, I think some of the questions we often get is how do we decide on the exchanges, or why did we kind of choose the 3 p.m. or 4 p.m. London time? And to kind of just paint some color on that, when we were first designing the index, it just seemed that the most volume globally was transacted on Bitcoin dollar around that 3 p.m. to 4 p.m. London time. And we want to really develop a global product for both institutional as well as retail customers. So it was important for us to settle when folks in Asia, Europe, and the U.S. had the ability to kind of transact at CME, as well as transact in the spot exchanges, to kind of tap into some of that underlying velocity and flow that the constituent exchanges were demonstrating and transacting in. And in terms of the constituent exchanges, we do have 4 right now, as I mentioned earlier: Bitstamp, Itbit, GDAX, and Kraken. And Crypto Facilities, who's the administrator of the BRR, we're constantly reviewing who should be included. Do we need to add new participants? And there's an inclusion criteria that exchanges must meet that people could check out on our website if they're interested in the details. But it's an evolving process where we really want to make sure that the Bitcoin reference rate and our futures contract is actually tied to and represents a very large portion of the Bitcoin dollar market, where historically the BRR has covered about 30 to 45% of the spot transactions that occur. So by aggregating that information and then wrapping a futures product around it, we think we're attracting a different type of participant that has the ability to both transact in spot and in the derivatives market. And that's kind of why we went with that distinction on the settlement route as well.
A participant that perhaps is attracted to the safer profile, I suppose, of the larger contracts and the more broadly spread index. Is that right?
I think that's one element, where if you have multiple constituent exchanges, there's no single point of failure. There are some inherent redundancies that are built into the reference rate such that it can be calculated even if there are divergent or possible aberrant moves on any of the individual constituent exchanges. So we just, the reference rate was designed around the IOSCO principles and guidance. It's been out there since November of 2016, calculated and published every day, even in advance of having the futures contract available starting back in December. So we just think it, in general, increases the confidence, and having a benchmark that uses things like that 1 hour window and volume weighted medians in terms of having certain deviation tolerances around the exchanges, that this all collectively increases the resistance of manipulation of the reference rate, which was a central tenet for us in guiding our design process for a future on the benchmark as well.
One thing that I think a lot of people probably aren't aware is that not all of your members CFE doesn't oblige its members to offer Bitcoin futures. Can you give us a rough idea of how many of your members are doing so?
Yeah, so in terms of the clearing members, where we have several dozen clearing members in our network, it's they have the choice to permission the contract for all their customers. They have the choice to permission the contract for a select few, or they have the ability to not offer the contract. So at this point we have I would say about a little less than 24 clearing members active in the product. We're continuing to work with more clearing members to answer their questions and address any type of either internal or risk management hurdles that they may have, such that they can offer the product to their customers. Because even though CME deals with our clearing members, we all have very common customers, and the customer demand for this product is really growing, I think, each and every day. So the pipeline for the product is strong, and we continue to work with our clearing members to get more on board and make sure they can offer the product to those customers that want to access CME's market to trade the Bitcoin future and manage their associated Bitcoin risks or use it as an access point.
And I'd like to talk about the CME's decision to set a relatively high initial margin of 43%. Could you explain to our listeners that may not be familiar with the term what the initial margin is for and why the CME chose that level? I mean, it's high compared to other types of futures.
Sure. So initially, CME Group announced margin would be at least 35% for the Bitcoin future. And then closer to launch, with some of the price action that we were talking about earlier, we set margin to 43% because of that volatility. Margin is driven based on the volatility of the underlying of the futures contract and other risk analysis and kind of regulatory engagement. So we started Bitcoin at a margin level of 43% for members and hedgers, and it's actually 47% for non-members, and this is significantly higher than other contracts. The one thing I would just clarify that this is the CME Group minimum initial margin for the contract, and our clearing members have the ability to increase that margin requirement of their customers as an additional layer of protection. But, Noel, to kind of your question, there's really two margin components at CME that we're constantly evaluating and monitoring. And the first is initial margin. That's also referred to as kind of performance bond. And that is something that a customer must put up to enter the contract to be able to buy or sell that contract on day one. We also require what's referred to as variation margin. So even after that initial margin contract, after the initial margin is deposited on that contract, we still run mark-to-market daily on that contract twice, midday and end of day, and customers are required to post 100% of that variation margin to their clearing member, which then gets posted to the exchange, such that gains and losses don't accumulate in the system in an unchecked manner. So there's actually two components to margin. And if any of the listeners are not necessarily familiar with them or want to learn more about the margin machinations, our website at cmegroup.com is pretty robust in detailing some of how that works, and they can see some of the other contract levels and understand that Bitcoin is higher, but that is done in a manner that we think further increases the safeguards that we have around the contract and increases our ability to manage the risk associated with the contract from a clearing perspective.
And are there any circumstances under which the margin levels might be revised in the future?
Yeah, so hard to predict the future, but margins are adjusted regularly across all our products based on the market volatility. When the daily price moves become more volatile, we typically raise margins. If they become less volatile, they may decrease in margin. But typically, our approach in clearing and in risk management is to ensure that the margins we do set for initial margin cover about 99% of the potential price moves over a specific period of time, usually, let's say, the last year or 6 months or so. So it is something that we are constantly reviewing, but we typically only review at the end of day, and any changes to margin will be broadly communicated to the market through a clearing advisory, which we disseminate, which is also available on our website every day.
Something Miha mentioned earlier, Tim, I'd like to bring up is the need for more futures in this kind of market. Do you expect more competition to come in?
It's hard to say whether or not I expect more competition to come in, but we definitely welcome competition and continued innovation in this space. Where I was saying before is we view this much more of the associated ecosystem around Bitcoin, where spot and futures are one element of that. But we welcome and hope there are additional product innovations such that the market participants have multiple choices to manage their risk, and we're highly supportive of the interrelated aspects across all products sectors where if you have a cash market, if you look at other products at CME, like some of the index products, we have a vibrant cash market, a futures market, an ETF market, and there's high symbiotic relationships between all three that increase the liquidity provision and the price discovery efficiency. So we're highly supportive of trying to evolve that ecosystem here for Bitcoin. But from our perspective at CME, we're very focused on Bitcoin right now. And that's our primary focus in this space, is just continuing to grow and evolve that ecosystem of the Bitcoin futures.
To enhance its maturity and therefore its attractiveness to the large investors.
That's correct. It takes time to develop a market, and while we're off to a very good start that we were talking about at the top of the hour, we acknowledge we have a long way to go to continue evolving this market, to get more participants involved in the market. And as we work to continue to satisfy our customers' need and work with our constituent exchange partners like Bitstamp and Miha, we want to make sure that we're working closely with other parts of the ecosystem such that we stay relevant and the product continues to grow and thrive as it has to date.
Do you think we'll see a Bitcoin ETF sometime this year?
I can't predict the future, but it's something we're watching, where we were of the belief based on some of the public filings, that I do think an ETF would be a catalytic event for the space, just given its ability to reach other parts of the ecosystem that we can't as a futures provider. So I can't say for sure when it would happen, but it's something we're watching closely. I'm very supportive of working with our customers who are the ETF providers to make sure that any way that we can help them in terms of using the future to either underlie ETFs or to be used in their risk management needs, we're obviously very supportive of. So I think we'll all be watching and waiting on that one, but only time will tell.
Miha, from where you sit, do you see a lot of pent-up demand for Bitcoin ETFs?
So you probably recall that Bitcoin ETFs are a pretty old idea by now. So the first time I think Bitcoin ETFs started to be mentioned in the space was, I think, as early as 2013. And at the time, everyone was kind of dismissive towards the whole notion that eventually we'll have a product like that. I think with years passing by, this is becoming a more and more real thing. And like Tim pointed out, it's hard to pinpoint exactly when it's going to happen. But I think it's actually not really a question anymore whether this is going to happen, but more when this is going to happen. But right now, I'm not really in a good position to comment on or give any good estimates.
And Miha, are you seeing demand for futures in other cryptocurrencies?
I think this is more a question that CME would get, but I think it would not be prudent to assume that cryptocurrency markets will just stay and everything will end with Bitcoin. And I think we should be seeing more futures products being listed, but I can't really say which ones are going to make the final cut, I guess.
That'll be an interesting space to watch. As we're all aware, the Bitcoin markets are coming under increasing scrutiny from regulators in the US and elsewhere. In what way could this impact the Bitcoin futures market? Tim, do you have a view on that?
No, I don't have a view per se, but just to say, that from our perspective with the Bitcoin futures, it's a constant conversation and touch point that we're having with our regulator, with the CFTC. Where back in 2015, the CFTC said that Bitcoin was a commodity. We self-certified our futures back in December. So from a futures perspective, we operate in that regulatory paradigm. In terms of some of the other broader regulatory questions that are in the marketplace, I'm not really in a position to say, because I'm just not that familiar kind of with the conversations and the questions. But I think in general, when you're looking at markets, markets will continue to evolve over time, both from a product perspective as well as potential regulatory perspectives and risk management perspectives. So this is an ongoing conversation we expect to have with our regulators and with all market participants to make sure that CME, as the trusted regulated exchange for futures, is that we continue to serve that role and provide for the efficient market for our customers that want and need to trade Bitcoin futures.
Miha, what's your opinion? Do you think that how would the Bitcoin market react to increased regulation?
For sure, one part of the market would not welcome it, and the other half of the market will probably welcome it with, greatly. So I think the growth of, let's say, Bitcoin futures markets and also regulation and impact of regulation to spot exchanges more or less goes hand in hand, because it's not, I think we're not in a situation where one would move faster than the other. It's more a question of moving forward and constantly talking with regulators, talking with partners, talking with exchanges, and trying to figure out what would be the best structure in a legal point of view, market point of view, so we actually can arrive to a point where we say, we have a working, global, mature cryptocurrency market, and it can, compare to just about any other market there is. So commodities, equities, you name it. So I think it's never so it's not the chicken or the egg problem. It's more like, how do the market participants and various stakeholders talk to each other and reach out and work a solution in the end?
And what do you think it would take, apart from a more developed derivatives market, to entice more institutional investors into the market?
I would say that institutional investors play by a different rule book. So they're probably they're focusing on different things that, for example, retail investors would focus on. And for sure, regulation, regulatory oversight, predictability, legal certainty, compliance are all aspects that you need to have in place if you want to attract institutional investors. So I think, in addition to maturing markets, we will definitely be seeing more regulation and also bringing more certainty and predictability to the legal framework in which our markets operate in.
I think the other thing that I would add is, when looking at, sometimes the label of institutional investor can speak to a broad swath of the market. And in CME, we've seen fairly balanced participation across the segments. But I think when we're looking at the institutional investor community, I think it's worthwhile to know that there's very different motivating factors for them to get involved. And to Miha's point, I think there are very different points of that life cycle where some are active, some are still evaluating, some are still learning. Just like we were talking about at the top of the hour, how we all had different, paths to get involved in Bitcoin. I think the same holds very true for our customers, where some have been in the crypto space for a long time. They've accumulated big positions in Bitcoin, and they're using futures to hedge that position, or perhaps to monetize that position via futures. But you also have then some firms where there's also been the advent of kind of crypto-only hedge funds that have occurred over the last few years, where they're solely focused in Bitcoin and other cryptocurrencies, where they may be looking to deploy kind of long-short strategies, systematic strategies, and they're kind of singular and focused. And then you also have some real money managers who are looking at Bitcoin as an alternative investment, and they're looking at allocating a certain percentage slice of their fund to the crypto space, and that's why they were advocating and wanting a Bitcoin future to happen on a regulated futures exchange, because they could use it as a primary access point. So this kind of idea that you have hedgers speculators and kind of replicators or access traders in the institutional space, I think is what gives it a very healthy and diverse personality, but they all have very different timetables. But I think, as I stated earlier, the conversations we're having with customers, that pipeline is strong, and we look forward to working with customers to kind of continue to increase that education, increase that awareness, and that wanting to trade. But I think this is when we're talking about institutions, it also helps to be mindful of very different personalities, even in the institutional space, and they're at different points of their life cycle with respect to commencing their trading of cryptocurrencies or Bitcoin futures.
You're quite right, because not only all of them have different timetables, but also different requirements. Not all funds are after capital gains. Some of them are just after regularity and safety.
Correct.
And what about the
for sure.
market? Sorry, go ahead, Mika.
Yeah, so maybe one thing that to also worth mentioning is not just the different needs, but it's also of these different sets of institutional investors to get comfortable with the actual technology, which is Bitcoin or whatever. Simply because this technology it's standalone, and it cannot be packaged in the format which these institutionals are already used to. So security, for example, is, in our experience, something which is of a lot of great concern and a lot of emphasis, for example. But it does take time to get used to it, and also the risk management, the counterparty risk, and so on and so on. So I wouldn't say it's just a one particular set of requirements, but it's also a different mindset that needs to be introduced to a lot of these institutions when dealing with crypto markets.
And perhaps the mindset, definitely, you're quite right, but perhaps also infrastructure. I imagine with the futures, it's a lot easier to trade them than it is to actually trade Bitcoin, because you don't have to worry about custodian issues.
And I think this is not just a challenge that institutions are facing, but I think this is also a challenge that cryptocurrency exchanges need to live up to and start building up infrastructure to be plugged into the more traditional market. So I think it goes both ways.
Yeah, and it could end up being symbiotic too, because with better infrastructure in the underlying spot market, that would attract more institutional investors who would evidence a greater demand for derivatives.
For sure.
Mika, what are you excited about for 2018?
Well, there's a lot of things to actually be excited about. So one thing is the pretty significant technological advancements we've been seeing in the space. So, whether it be SegWit, whether it being the prospects of level 2 applications built on top of the Bitcoin blockchain, for example, Lightning Network. Also the introduction of a more predictable approach by different regulators worldwide, the prospect of maturing markets where everything becomes much more predictable and less wild, because you can imagine that a lot of people would agree that there's never a boring day in crypto, but I, for one, would be pretty grateful for maybe just one boring day in crypto every now and then.
Every now and then, yes. Good luck on that.
Yeah, thank you.
And Tim, what about you? What are you excited for 2018?
Yeah, I mean, it's hard to even believe that we're already in the middle of March of 2018, so I think 2018 is already flying by. It's just really exciting to see the enthusiasm in the industry for Bitcoin futures. I think the attention that both the futures and the underlying spot market is getting is fantastic. I think the more people continue to become educated and familiar, that will only become better for the overall ecosystem surrounding Bitcoin. And we're looking forward to continuing to grow this new market with our current customers and new customers that may come on board. I think a lot of folks are kind of always curious and want to know what else we have kind of coming down the road. And we don't really comment on the product pipeline, but we're very focused and kind of dedicated right now to continuing to build the Bitcoin futures market. And that's keeping us quite busy thus far in 2018, and I expect that to continue. But I'm just really I think I'm excited just to see where the growth goes from here. I think like probably many of your listeners are as well.
You're so right. It certainly will be interesting to follow the space, and I want to thank you both so much for taking the time to come and speak to us. I mean, thank you, Tim and the CME, and thank you so much, Micha and Bitstamp, for sharing your knowledge and your expertise with us. And thank you, our listeners, for joining us today. So don't forget, you will be able to listen to this again if you wish to when it's up on our web, which will be as soon as shortly. And don't forget to keep an ear open for future CoinDesk webinars as well. And of course, anything you need to know about the cryptocurrency and blockchain space, you can see on CoinDesk.com. Hope you all have a very good day. And again, thank you all so very much.